There's a whole process, including post-IPO. We have to train the board. We have to make sure that they understand what now this corporate governance environment looks like.
A board?
Yes, of KPC. We have to handhold them for some time, as well as monitor how is the company performing, how the shares doing, ensure there's good liquidity in the market. So there's a process even post-IPO.
So this is a CTA Masterclass on IPOs. I know you're excited about this episode because now this is where we get into the meat. You get to understand how the team got the valuations. You get to understand why the cost is the cost that it is. You also get to understand all these different jargon words that have been thrown. Okay, Rina, thank you so much first and foremost for laymaning the terminology that maybe a lot of people may not have understood, especially those who are not in the financial industry. You're taking different people, different age groups. I'm talking about a 14-year-old can understand this conversation. Anybody can understand this. So thank you.
You're welcome.
Now, you in corporate finance, heading the corporate finance team, and Faida under Faida Investment Bank, and Faida being the lead transaction advisor for the KPC IPO. See how I understand this because of how well you've explained. I want you to walk us through this process. You get given this assignment, or you win the bid to do this. What then happens? How do you then begin the process?
So the process actually begins before you win the bid. So let me just put this into context.
Okay.
Because it's important to explain the kind of experts we have to have on board to get a transaction of this nature.
Okay.
So there's certain requirements that are usually in a request for proposal that is sent. So the government, through the Privatization Authority, sent a request for proposal to RFP to all these different organizations. I mean, you could apply if you want. And so when we looked at it, we said, okay, we need to line up very serious experts in all these different fields, including an energy expert, an engineer who understands, or an organization that is in engineering that understands pipelines and energy and has been in that sector for many years and understands the dynamics. You see, we're in investment banking. So that we're not doing guesswork. When we're doing a due diligence, for example, when we're doing a due diligence exercise, we have the experts that are available. So all the experts around operational due diligence, running this transaction itself as a whole, so operational due diligence, tax due diligence, financial due diligence, we've had to put together a very solid team. Then put all those CVs together and then go in as one organization with some consultants and put in a bid. Okay. We're together till then.
We're together. Now, so you didn't just go as Faida?
No. I mean, it's Faida.
No, I get what you mean. You didn't just go as Faida corporate finance team.
No.
From an investment perspective.
No, we have consultants that we added to the team.
Okay.
To beef up our corporate finance team for the period of this IPO and listing and post-IPO. Wow. Because it's not just getting listed. There's a whole process, including post-IPO. We have to train the board. We have to make sure that they understand what now this corporate governance environment looks like.
A board?
Yes, of KPC. We have to handhold them for some time, as well as monitor how is the company performing, how the shares doing, ensure there's good liquidity in the market. So there's a process even post-IPO, and also hand over a compliance department that understands investor relations. How will they engage investors in the future? What are investors looking for? You understand? So it's quite a process.
Yeah, because there's different requirements for a public listed company.
Absolutely.
And these guys were not public listed before,
no.
So they don't know.
Exactly, and they're continuing obligations. Let me give you one. When there's material information, even the definition of material information, they will need to understand, what does that mean? Material information is information that can substantially change the price of a company on a stock exchange, change of a board member, change of a CEO, change of strategic direction, or you have somebody who is coming to acquire the business. Anything that is material in nature must be informed. The CMA must be informed within 24 hours of that decision being made by the board. So things like that. There's continuous obligations, including when they must issue their accounts, by when, because it's deadlines now. It's not just, when, I will just, when government, no. This is now a different way of operating. So
they come, Kenya Pipeline Company previously was not under CMA.
No.
Now becoming public listed company, they also are. They're of course, EPRA is still going to be regulated by EPRA, but now they have a new guy who's coming. Okay, so
I haven't answered your question yet.
Yeah.
What's the process? So I went pre. I've talked about a little bit of post and why we had to do the pre really, really well. And now, during the process, so now we have to hold meetings. We have WhatsApp groups. We have email groups. We have to remain in communication. We have to have meetings with the privatization authority, with the company, with the rest of the team, so that we have a coordinated effort. You see, we're not doing everything. We have PwC on one hand that has to get something done within a certain period of time. We have to have a timetable and a Gantt chart that tracks our process to ensure that we are working in a timely fashion. The only way we can do that is a well-oiled, coordinated machine of advisors that are speaking in one voice. Now, so we began to have not just weekly meetings, more than weekly meetings, because we have to have committees that meet as well. We wanted to have this as an electronic IPO. What does that even look like from a CDSC perspective, from an NSE perspective, from a shareholder perspective, from the registrar perspective, from the banks? There has had to be integrations of systems that have to happen so that when you pay in your bank, then the registrar gets notice you've been paid. Like, it's a whole process. And so meetings.
And previously, had any IPO been done electronically?
No, it's the first one.
Wow. Okay.
It's one of the most proud things I am of the team, for the entire advisory team for what we've been able to achieve.
And just to explain to somebody, when you say it's electronic, what does that mean?
It means that we're not accepting manual applications. The only exception is for qualified institutional investors that require an approval process that has to have to get several signatures and things like that. So there'll be a handful.
Yeah.
So everybody else,
but
whether you're
retail
a company,
investors, and I'm talking about, you guys throw the word retail investors.
Okay. Individual investors.
Yes. Me, Aizo, who's here behind, they know, the camera guys, the building that we are, the guys who work here, those guys are the guys you're calling retail investors.
Yes. Including high net worth.
Yeah.
They're all individuals. As long as you're an individual
I'm not
investor.
high net worth.
I didn't see you. Okay. As long as you are an individual, you're a retailer. You're a retail, not a retailer, but you're a retail investor.
Yeah.
So all retail investors and companies as well. Unless you're a qualified institutional investor, you will apply on an online platform, the eIPO platform, or for individuals, USSD, which is so easy.
Okay.
And the USSD, you just do hash, the number,
the one on the screen,
star, the number hash, and you go through a process. There are prompts, you key in your details, you key in your ID, you key in your CDS account number, and so on. And so that process has been made very, very simple. There's many lessons that we learned from the previous IPOs that we've had, and we then took those lessons and applied the learnings from those lessons to make sure that we have a smooth, seamless, very quick reconciliation process post-IPO, just to make sure that everything happens very, very quickly and well.
Okay, so you're talking about the process. I know I keep cutting you short, interjecting.
So going back to the process, so meeting weekly and even more than weekly for those who are working on different work streams, because we had parallel work streams at the same time. So we have a team going out to all the different areas where there's a pipeline, a depot, buildings, land that is owned, that are doing the valuation.
Okay.
We had a team.
Again, let me slow you down. This sometimes here's where people can get lost.
Okay.
So you get these different teams.
Yes.
When you say, for example, valuation,
what are you?
Who is the team and why are you sending them out to do what?
These are expert licensed valuers who go and look at this building. How much is it worth? What's the market value? What's the first sale value? There's a whole process of valuation that land and building valuers, asset valuers. They're called asset valuers that they go through. And they have to go and assess the land. They have to make sure titles exist, that they are not encumbered, meaning you've not taken a loan against that title, or that the title process when you acquired that asset was completed, because when a piece of land does not have a title in your name, it is not yours. Even if you show me you paid for it. Do you understand my point? I
get it.
So they have to also check all of that and then come with a value of all the assets that are owned by the business. Then now there's business valuation, which is different from asset valuation.
So wait, Rina, you talked about this pipeline is how long?
1,342 kilometers.
That is land that it sits on.
Well, no. So there's some land that it does not own. Yeah. So there's land that it owns.
Okay.
In different parts of that pipeline. There's land that it owns even separately from the pipeline, where they have training centers and things like that. So it's where they have titles for land that they say they own, including vehicles, including,
any asset. Okay.
Yeah.
My mind was just doing some quick calculation and just about the amount of workload that they had to do.
No, it's a lot.
Okay.
It was a lot.
And how long have you been working on this process?
So we began on the first week of December.
What?
Yeah. That was when after being appointed, when work actually began. Yeah.
When people got on the ground and started moving.
Yes.
That's a career. Short.
We haven't slept. Did I tell you I want to go on a nice long holiday?
Okay.
It's been a long journey.
So.
But a short one as well. Intense.
Asset valuation, I have got an understanding.
Okay.
Explain to people what is the reason for doing the valuation? What are you trying? What's the goal?
So when the company comes on the stock exchange, right? Or no, even before the stock exchange, when the company is selling its shares, at what price will it sell its shares? We have to understand what the value of the business is to determine pricing. So price is a function of value of a business, but also is a function of willing buyer, willing seller, supply and demand, and what are people willing to pay for that thing. So if I'm selling my car, I will go to a valuer. How much is my car worth? Then I will go on places like Gigi to check this kind of car for this year, this kind of make. How much are they selling for roughly in Nairobi? And then it could be less than my value or it could be more than my value. And then I determine my price. Yeah.
It's like when people say my net worth is this much. They take in consideration not just their salary and how much they have in cash, but even their properties, houses, and other buildings. So when I've got an asset valuation that you are doing, the other thing that I heard you say is business valuation. Okay, explain that.
So the business valuation now looks at how has this company been performing? Fine, they have all these assets, but to what extent are these assets generating revenue for the business? And how efficient is this business? So investors, fine, you have nice assets, but I can't sell a pipeline, right? Where will I sell it? I want to know how much revenue is this pipeline generating. So the business valuation has a very important component because it looks at revenues, it looks at the cost of those goods sold to be able to generate that revenue. It looks at the expenses, administration expenses, staff costs, all these different costs. And then we have the profit that comes after all these expenses are taken out. What is that profit? And then we have tax and all these different things. So you look at that 5 years prior, and then you also want to project in the future to see, given the strategy that this company is looking to get into, what is the likelihood that they're going to make the kind of revenues they're saying in their budgets that they're going to generate in the future? And so you do like a sense check of that in collaboration with the reporting accountant, who's also checking and making sure that the numbers are correct and so on and so forth. And then you do your projections. And so you can decide, I'm going to see from a different methodologies, whether that's free cash flow to the firm, a dividend discount model, a dividend yield model, a relative valuation model. There's different kinds of models that are used for valuation. You come up with a value based on certain assumptions of the business. So you also have now, you can decide to do what we call a sum of parts and say this is the assets and this is the
business value.
business.
Yeah.
That's not correct. The assets are a different valuation methodology, which then is like a net asset value. What I meant to say is they have two companies. So you would then take the valuation of one company and do a sum of parts, basically saying they add this valuation to this valuation, it gives us a total valuation of this, because you have two companies, Kenya Pipeline Company and its wholly owned subsidiary, KPRL.
Which you explained.
Yes, which I explained earlier.
Yeah. Okay. So after doing all this, what did you guys learn?
So we learned several things. We learned things around
and is
court
this
cases.
Public information?
Yes, it's in the information memorandum.
So right now somebody can go and download this document called the IM, the one you're seeing on the screen. Click on the link, go to the description, and you can follow along.
Yeah.
Or maybe even read it after.
Yeah.
Or throw it to ChatGPT to help you ask questions.
Yeah, tell me, should I buy this?
Okay, so what did you find out?
So there's many things we found out. There's many things we found out, including some land that has some dispute which we were not able to include in the asset valuation. But that land really belongs to KPC. But unfortunately, we were not able to add it because there was no title.
Yeah.
And all of this is disclosed in the IM. We found out about several court cases, some of which have already been awarded against Kenya Pipeline and NEMA, and basically some environmental. There was a leak, an oil spill that happened, and so the court awarded. But even the way that it was awarded and so on, there were issues. But we still removed the value. We deducted the cost of that court case, which I think was coming to 2.8 billion shillings, from the value before. In fact, KPWC removed it as an expense. So there's certain expenses that then were deducted in 3 different years over the past 5 years that had to do with these, what we're calling contingent liabilities. Because it's like, it's probable that they might have to pay. We don't know what the amount might be. There might be an appeal, and we know that there's an appeal on some of these things. They might not pay the 2.8, they might pay less. But for now, let's take the maximum, because we don't want to then come back and say, oh, now we have to deduct this money in the future. So we were very conservative. PwC was very conservative in the way that they did their restatement of the accounts, to ensure that the accounts that are presented in the information memorandum that are being used for the basis of valuing this business are not, in fact, you'll find that the accounts show lower performance than what was reported, in their accounts before. KPC's accounts have been available on their website all these years. And so if you had done the evaluation before, now you'll come back and see, oh, this has been removed, and therefore this is the situation. So just thought I'd say that, I guess, just to be transparent.
First of all, I like the fact that it shows the level of due diligence that was being done from an asset valuation perspective.
Completely independent.
That they found them. They found this court cases or this leak that had happened. And then also, PwC is a global auditing firm. Yeah. It's credible. It's credible. The deductions that have been done. Yeah. I want to also hear, I like that you're sharing from a transparency perspective the negative things that have happened. What are the positives that you found?
I think the operational due diligence and the technical due diligence just revealed the level of professionalism that this organization has, and the lengths that they've gone to ensure that ESG, the environmental, social, and governance around protection, safety, precaution, just making sure their machines are working properly, and where they're not, putting in systems to make sure efficiencies are increased. It was quite impressive. What else did we find? I think they're performing fairly well. As I had said earlier, their margins are healthy, they're profitable, and they've been profitable for a long time. The government has really been benefiting a lot from the dividends that they're getting from this company. And so, I think there's just, it's a good company and it's well run. I can't wait to see what comes of Kenya Pipeline once it becomes privatized, because governance is going to improve. What does that mean? The heavy government influence that says you have to pay us a dividend of 80% of what you earn, that goes. Now that reduces to 50%. as a dividend policy. And even then, a board can sit and say, we're not going to pay 50% dividend this year because we have to reinvest or whatever it is. Perhaps 10 years from now, they change the dividend policy as an institution for the benefit of the business to be able to generate capital gains for shareholders. It just gives it more flexibility because now you have a board that then makes a decision on what happens to this business going forward. For now, the dividend policy is changing from that huge percentage to just 50%.
So, again, I'll always, hey Rina, you've got gems on gems. You've talked about dividends. For somebody who may not understand, who's hearing dividend for the first time, this is revenue paid, as you were saying, it had to be paid yearly.
Yes.
On the basis of the shares that the government had. And the government had 100%.
Yeah, so whatever profit you make, I need 80%, please, thanks, give it to me. Now you figure out how you reinvest the 20% that's left.
So that was the policy. It was 80% of the profits that the company makes paid out to government.
Yeah.
Government is rough.
But it owns the business.
But it, actually, to be honest, it owns the business. And so for somebody, explain what dividends is. I know I've sort of said it, but I'd like you to say it. Because part of owning a company, some of the benefits that come with that is dividends.